Okay, so hello and welcome to Screening for Different Investing Goals, and thank you so much for joining us. My name is Alex Reisman, and I'm the Communications Manager for Stock Rover. I also want to say welcome back to many of our regular attendees. As many of you know, our webinar program has been on hiatus for several months, so it's really nice to see so many familiar names on the list, of course, as well as many new names on the list. So welcome everybody. Today's presentation will run about 45 to 50 minutes long, and I definitely want to keep it under 50 minutes. So that's going to give us time for some questions at the end. As usual, Stock Rover CEO and co-founder Howard Reisman will be joining us for the Q&A. He's an experienced investor, and he's also very familiar with the product roadmap. So he's a great person to ask any questions you have about investing with Stock Rover, whether or not they pertain to screening. I just want to go through a few items of housekeeping before we begin the presentation. So first of all, as I mentioned, the webinar is going to be recorded, and I'll be sending out a link to the recording as soon as it's available online, which is usually within a day. So if you can't stay for the entire presentation, or if you missed something and want to review it later, you'll be able to do so. There are some notes to go along with the presentation, and I want to show you where those are, because I do recommend downloading them. If you go to stockrover.com/webinar-outline.html, it'll take you to this page that has all of our webinar outlines for all of our webinars in the past. And you can see that this one's the top one, so you can get it as a Word download or a PDF download. And this is also where that video link will be posted when it's available. If you can't remember that URL, you can also just go to Resources, Upcoming Webinars, and click where it says click here for recordings and notes from past webinars. So that'll take you there. The notes contain some stuff that I won't be able to get to in the presentation, as well as some assorted tips for expanding on screeners or going further with them. So I definitely recommend those. At any point during the presentation, just submit a question that you have through your control panel, and then we'll answer all of them at the end. And so I'm going to ask that you please be as clear as possible in phrasing your questions so we can get you the best answer, and also so that we don't waste anyone's time in trying to interpret it. Since we're answering it at the end, we're not going to necessarily have the context that you were asking the question in, so it really helps us if you can be as clear as possible, and we greatly appreciate that. As you can see, I'm using a premium account, so Stock Rover Premium. I will show you a couple basic screeners or basic screening capabilities, but our most sophisticated screening tools are in the premium subscription, which is our paid subscription option. And then finally, just our standard disclaimer, nothing in this presentation is intended as a recommendation to buy, sell, or hold particular stocks. We always recommend that you do your own research before investing your own money. So let me get started. First of all, just a note on the structure of the presentation. I'm going to start a little bit slower, kind of walking through the motions of creating screeners and using different screening tools. And then we'll, towards the end, we'll run through some screeners a little bit faster, just to show you different ways you can use those tools. Okay, so first of all, in addition to all the screeners that we're going to be talking about, which are laid out in the notes, so don't feel like you have to, oh, sorry, my mouse is getting away from me. Don't feel like you have to scribble down all the criteria. It's already written down for you. But you can also get all the screeners that we're going to be talking about today in our library. So to get to our library, go to the Start menu, and there's a button for Browse Library. If you've customized your library, your Start menu, you won't have that button there. You might not have it there. You can just search for Library here, and we'll open it up that way. So the library, if you've never used it before, is a place where you can download sample portfolios, watch lists, views, which are these tabs at the top of the table. You can import those into your account for free at any point. So there's also a section for screeners, and all of the screeners I'm going to talk about today are actually included in this. So they're not all in the order listed here, so you'll have to search for them, which you can do at the top. And then just check off the ones you want to import. You get a little preview of them down here, and hit import, and then they'll get added to your account. Just be aware that anything that has this yellow star is a premium screener, so if you're a basic user, you won't be able to access those screeners. Okay, so I just want to quickly open the notes. I didn't have quite enough to make a whole PowerPoint. I just wanted to quickly show you one thing, and I'm going to switch over your view So I apologize for the delay. Okay, great. So now you're seeing the notes, and I just want to discuss a little bit before we get into it. What is screening? Many of you are probably familiar with screening. It's really just at its heart, it's just a set of rules that narrow down a population of stocks. And theoretically, you're looking for a population of stocks that match some investing goal or multiple investing goals. Because of that, it's an incredibly flexible way to try and sort of exert your own investment preferences and philosophy. And it's also a really fun place to experiment and test. So there's no such thing as a perfect screener. There's no screener that's going to deliver only good investments and no bad investments. You always have to follow up with research, but you can use screeners to find kind of the way I think about it is constructing a frame, and your frame is going to let in certain stocks and let out certain stocks, or keep out certain stocks, and that just gives you a place to start. It gives you a view with which to begin your research. So scrolling down, there's one other thing I wanted to point out in the notes. The name of this webinar is Screening for Different Investing Goals. So I just created this pretty simple table expressing different types of investing goals. So for example, you might be looking for growth stocks or value stocks, or you might be interested in companies that are very profitable, companies that are experiencing, or stocks that are experiencing a lot of momentum. So I kind of broke it out into this table. This is not an be-all, end-all list of investing goals, but hopefully it gives you some guidance as to the different types of metrics you'd use to support these types of goals. So for example, if you're looking for growth stocks, you'd want to be looking at metrics like EPS and sales, operating income, and especially how those metrics are changing over time. Likewise, for value stocks, you'd be looking at the price to book, maybe compared with its 5-year range of price to book, or EV over EBITDA and things like that. So once again, this doesn't contain all the metrics that you'd use to get at those goals, but it does give you kind of a starting place, and hopefully can help you organize some of your thinking. All right, so let's jump back to Stock Rover. And I'm just making sure, okay, good. So now I know you're seeing this too. So let's first just start by looking at all the screeners that we have already constructed. So I've got screeners selected in the navigation panel. I can open it up here and see them all broken out. But when I have that parent item of screeners selected, I actually see my whole screen, all of my screeners, basically whole screeners shown in the table. And what I mean by whole screeners is it's showing me sort of all the stocks that are currently passing that screener in aggregate. So for example, the market cap, this is the average market cap for all the stocks that are currently passing the GARP screener. So what's nice about this is it gives you the ability to evaluate whole screeners, compare whole screeners, and also just make sure that a screener you're using is performing to your standards, or perhaps doing what you expect it to do. You can also chart whole screeners as well. So as you can see down here, the GARP screener is being charted. And I'm actually going to close the chart now since we don't need it for the rest of the presentation. Okay, one other thing I wanted to point out while you have something selected here in the table, or a whole screener selected in the table, if you run over to the Insight panel on the right side here, so the Insight panel always shows you whatever you have selected in the table, and in this case we have a whole screener selected. So you're not going to get some of the things you get when you have a stock selected, like the detail tab, but what you do get is this interesting top 5 movers table. So you can see the best performers, worst performers, and most actives over, in this case, the last day, but you can change that time span. So we can make that 6 months, for example. You can also add a column to this. So if I wanted to see that alongside market cap or sales or something like that, I could add those in here. So it's a little bit of a hidden feature, and I just wanted to point that out to you. Again, you'll see that when you have screeners selected in the navigation panel and then a whole screener selected in the table. All right, so let's start by creating a basic screener. I'm just to create a new screener, you can either right-click screeners here and select Create Screener, or you can go up to the Start tab, the Start menu, and I'm just going to start typing screener. Create Screener is the second option. So this opens up my Create New Screener window. And let's see, so in step 1, you have the ability to name your screener. You can select Quant features, which we'll do a little bit later. That's an advanced capability, and then give it a description. So I'm going to give my screener a name called Out of Favor. And I'm starting with this screener because it's a little bit different than what we typically think of screeners as doing, which is finding stocks that are performing really well. The purpose of the screener is to find stocks that are performing poorly. And I'm going to grab the description of it from my other document. Okay. You don't have to put a description, it's optional, but I actually recommend it because for one, it's nice because it kind of sets out an intention for the screener. So you're basically telling yourself what you're trying to do with the screener. And it's also great for reference later. I use it all the time to remind myself what exactly I'm doing with a particular screener. So here I've written, find stocks that are out of favor based on technical factors. And actually, it's not just technical factors that we're going to be looking at. We're also going to be comparing, we're going to be sort of looking at out of favor in the context of historical performance. So you can add that into your description if you get the screener. So we're going to start with some technicals. And step two is where you begin to add your criteria and basically build up your screener. This is the only screener we're going to use today that has technicals. So I just want to show you where you can find them. Technical indicators is a folder, and I'm going to start with a money flow index. Money flow index is an oscillator, which is going to indicate basically if a stock is looking overbought or oversold. It oscillates between 0 and 100, and anything that's under 30 is considered oversold or out of favor. So I've just entered in 30 here, and it immediately gets added down here in step 3. And another thing you might notice is that below that you have, it's going to show you how many stocks are actually passing that with just that one criteria. So we've got 1,300 stocks out of almost 8,000 from the North American exchanges. I'm also going to add in relative strength, which is very similar to the MFI, but it doesn't incorporate volume. I prefer the MFI actually because it does include volume, but the RSI is sort of more commonly used. So that's why we're using both of them. The next thing I'm going to add in is 5-year price range has to be less than 40%. So I might actually forget where the 5-year price range is located in those folders. I can just start typing it up here. And it turns out it's going to be the top one I search for. When I click that, it's going to jump to it, and it turns out it's in the price folder, which makes a lot of sense. So I'm going to select lower than 40. So in other words, these stocks are going to be in the lower 40% of their price range over the last 5 years. So they're performing badly compared with their historical performance. And then we're going to look for 5-year price to book range, and actually we'll show you exactly where that's located as well. If you go down to advanced metrics, and then there's valuation range. And I just wanted to open up the advanced metrics folder because it contains a bunch of other folders. And I think it can sound kind of intimidating, but it's got a ton of great stuff, and it's not just for advanced pros, of the investing world. So feel free to check it out. There's a lot of good stuff in this folder. So we'll open up valuation range, and we're going to use 5-year price to book. Has to be less than 40%. And 5-year price to sales has to be less than 50%. And then 2 more criteria. We're going to be searching for the 52-week range. This is the top one that comes in here. And we want it to be in its lower 20% of its 52-week range. And finally, the short percent of float, or the short interest. So basically how many shares are currently being shorted. And we want that to be, let's start typing in short. It's the first one. We want that to be above 10%, so kind of a heavily shorted stock. So definitely stocks that are out of favor. And you can see we're only getting 18 stocks passing, so that's actually a very small population, but we'll stick with it and click Create. When I click Create, it gets added down here, and you can see the 18 stocks are now loaded in the table. And I'm going to just drag it up with my other basic screeners to keep things neat. So with something like this, let's jump over to historical returns. You can then start comparing all these passing stocks in different tabs in the table. Not surprisingly, its historical returns, the returns for this year are very poor, which is exactly what we kind of determined via the criteria of the screener. Sorry, just blanked for a second. What you'd be wanting to look for here is stocks that are cheap. So so basically you potentially these are short candidates, but more likely than that, you're hoping to find a stock that is actually a fundamentally good company that's just hit a rough patch and would be coming out of that. So you may not find it with this screener because it's really such a small population, but I just wanted to give you an idea of what you would do with something like this. So this is a screener that you're really finding stocks that are kind of doing badly with the idea that perhaps they'll be coming out of it. In particular, you might look for stocks that are in a cyclical industry that would be where the industry might be due for a comeback as well. Okay, so that's a basic screener, and let's take another basic screener and convert it into a premium screener with a few different tools. So I'm going to take this dividend growth screener, which you can see. So it's the description here is a screener composed of Stock Rover dividend growth metrics, which is perhaps not the most descriptive, but dividend growth is basically a philosophy where you're looking for companies that have the potential to grow their dividend quite a bit, and they're also growing companies, they're growth stocks. So you're sort of getting the growth on both ends, ideally leading to a very strong total return. And we have a whole blog post on dividend growth as compared to dividend yield, which is where you're looking for stocks that have just a high dividend yield. And I'll show you where that's located. That's the fantasy portfolio, dividend growth versus dividend yield. You can get to that in our blog. So if you're interested in this philosophy, check it out. This is actually a really useful blog post, kind of explains it in more detail and will illustrate why we tend to prefer dividend growth strategy over dividend yield strategy. Okay, so let's see, where was I? Dividend growth screener. Okay, so what I'm going to do here first is I'm just going to copy the screener. So the copy function is really nice because you can kind of set up a screener, make a copy of it, and then play with it as you want. I'm going to save that. I'll just call it Dividend Growth Screener 2. It doesn't need a new name. And then I'm going to open it up here and update it. First of all, I can see that 59 stocks are passing. Right-click, select Update, and now I can play with all the metrics that are currently in this screener or add new ones. So the first thing I want to do with this screener is add quant features. So I'm going to add quant weights. Quants basically allow you to separately weight different criteria, and then stocks are scored using those weights. So what's unique about Stock Rover's quants feature is that you have complete control over where you place your weight. So it gives you a ton of flexibility, and you can use it basically to the nth degree, trying in different ways. And we'll see a couple of different ways that you can play with quants. I'm going to use them quite a bit now, and then I'm going to leave them for a little while and come back to them at the end of the presentation. All right, so how do you use quant? So when you select that box, first of all, there's a few new fields that open up. You've got limit up here, so it's saying we see the top 50 ranked stocks that pass this quant. Because we know that only 59 passed it, I'd kind of like to see all of them ranked, so I'm just going to increase that limit to 100. And then down here in the middle section, there's a new field called weight, as well as the option to select the direction that you want where you want to place the weight, high or low values. So we'll start by adding weight to all of the criteria that are already contained in this screener, but you don't have to. You can actually add weight to metrics that aren't already filtered, or you can have filters or weights or filters and weights on any given metric. Let's say we want to do 20% on dividend yields. But in this case, because I'm specifically looking for dividend growers, I'm actually going to preference stocks that have a lower dividend yield. So all the stocks that pass this screener are going to be within this range of 1.5 to 3.75. So all of that's good. But within that, I'm going to sort of give a preference to stocks that are closer to that 1.5. And that's just because I'm hoping to find stocks that have more potential to grow their grow their dividends. So as soon as I add that weight, it gets added down here in step 3, and all the weights will get added up together. So we want to make sure that they add up to 100. The next one I'm going to add is kind of similar to that, and I can just pull from down here, payout ratio. So I'm going to put a 10% weight on payout ratio, but once again, I'm going to preference stocks or companies that have a lower payout ratio. So they're within a totally acceptable range no matter what, but I'm going to look for companies that are paying out a little bit less in dividends, and that gives them, first of all, hopefully more growth opportunity or growth capital, and also the ability to theoretically increase their dividend quite a bit more in the future. All right, so the next one we'll do is EPS 5-year average. So we really want to place a fair amount of weight on this because we particularly care about growth stocks here. So I'm going to put 30% weight on that. And then sales average, similarly, we want, here it is at the bottom. I'm going to do 20% weight on that because we care quite a lot about that growth factor. And then lastly, I'm going to put the remaining 20% on the dividend 1-year change. So we're looking for 20% or putting 20% weight on a high dividend 1-year change. So we know it'll be at least 8, but ideally it's even greater than that. So let's see what we get when we update that. Okay, great. So now all the stocks that pass that screener, we have all 59 rows, they're ranked 1 to 59. And this company called Graham is number 1, AmTrust Financial Services is number 2, and on down the list. I can mouse over the rank and I get this little tooltip that explains what's going on here and why it's number 1. At the top, it's going to list out all that quant criteria. So the dividend yields, it will say it had 1.8 dividend yields. That puts it in the 35th percentile. You multiply that by the weight of 20, and you get a score number 7. Let's see, the dividend 1-year change is really high. It looks like they doubled their dividend in the past year. So that puts it in the 98th percentile. You multiply that by the 20% weight and you get 19.6, et cetera. So all that goes into the total score of 77.8. And that happens to be the best of this group. In the bottom part of this tooltip, you can see the filter breakdown, which is where you have all the criteria contained, all the filters, and you can see its exact value in each of those. So it just gives you a little bit more information. So I can see that, for example, in the average increase over the past 5 years has been 32% of their dividend. Okay, so let's take that screener and just add one more thing to it. So we did quants, and now what I'd like to do is add in equations, which is sort of our other premium capability. And I'm going to leave everything else about the screener the same. I'm just going to add a little bit more stuff. So I'm going to check this use freeform equation box. And that's going to open up the equation side of the screener. And by the way, you can check and uncheck this box and it won't affect your values down here. When you uncheck advanced quant features, that will remove the quant capability. So just so you're aware of that. So I have 2 simple things I want to add. The first is I want to compare the current dividend yield to the dividend yield 2 years ago. So with equations, you can basically take any metrics that we have in Stock Rover and compare them or put them in an equation together. And you can also have access to historical data. So not only can you see, for example, return on equity from this year, but you can look at last year's return on equity and compare it to either an absolute value or a current value or what have you. So you'll see me do that a couple of times today. So I'm going to add dividend yields. Start typing. It's the top one here in the search results. And you can see it has this little calendar icon, which indicates that there's historical data available for this metric. So I'm just going to click that, and I'll do a greater than symbol. And then I can either search for it like I just did or select it from here in the list, or I can simply begin typing it. And the same search results appear over here on the left or on the right. I'll click that. And so now I want to say dividend yield now is greater than dividend yield 2 years ago. To get 2 years ago, I just click the now button and select 2 years ago. So very simple, and I'm going to save that together. And that gets added down here as an equation criteria. You can see below that 53 stocks currently pass, so we've only knocked out 6 from the whole population of stocks that were already passing this screener. So it's not it didn't add a whole lot, but it did say something that wasn't actually available in the screener before, which is to say the dividend yield is not only within this range, but it's also increased over the past 2 years. And we're going to do something similar for the next one. I'm just going to start typing, and we're going to do we want the dividend 1-year change to be greater than the dividend 5-year average change. In other words, we want the pace of the dividend growth to be increasing. Same thing. Dividend 5-year average. Okay, so it's very simple. We have those two metrics, and once again, we actually had that. We had dividend 1-year change and 5-year average already in this screener, so we know that they're both going to be at least 8% growth. But what we didn't have was a criteria saying that the dividend 1-year change actually has to be greater than the dividend 5-year average. And that actually was a little bit more restrictive. So you can see now we're down to just 24 passing stocks. So I'm going to update that. And so now we just have basically a narrower list to work with stricter criteria. And just to be clear, those quant weights are the same. So Graham is still number 1 because it passed that stricter criteria, and it's going to have that same score that we saw before. So we didn't change anything about how things were weighted. The scores won't change. It only affected how many stocks get through to this population. All right, so I'm going to take a quick sip of water, and then we're going to move on to the Petrosky High F-score screener. Okay, so let's see, the Petrosky High F-score screener. We wrote a blog post on Petrosky. Here, I'll just show it to you. I have it open here. Joseph Petrosky he's an accounting professor, I think, at Cornell, and he created this metric called the F-score, which basically uses 9 different criteria to see if to score a stock's fundamental financial metrics, basically how strong a company is. You want it to be financially healthy and also improving its financials. It's very popular. The blog post goes into detail on all the different criteria and what they mean and sort of the justification behind all of them. So I do recommend that. It's actually been one of our most popular blog posts if this screener interests you. We don't currently have the F-score available in Stock Rover, but we will soon. But what you can do now is just use this screener. So it's called the High F-score screener, and what it means is any stock that passes this screener automatically has an F-score of 9 because it's passing all of that criteria. And it looks a little bit messy in the tooltip, so what I'm going to do is actually show it to you in the screener manager. So the first screener criteria here is ROA is greater than 0. That's actually a simple filter that you could accomplish without the free-form equation, but just note that you can also put it in here. And it kind of keeps it neat because they're all equations in that case. The next one is cash flow. So cash flow greater than 0, very simple. The next one is ROA has to be greater than ROA from last year. So that's very similar to the one that we just ran in the last screener that I showed you. Likewise, here's one where you're just comparing 2 metrics. Cash flow has to be greater than income after tax. And then this next one I wanted to show you because it kind of takes the equation form a little bit further. So we have long-term debt over total assets is greater than long-term debt over total assets from a year ago. Joseph, like he's my friend, Petrosky uses this criteria, long-term debt, or this metric, long-term debt over total assets. It's a ratio we don't actually carry in Stock Rover, but we do have long-term debt and we do have total assets. So you can create that metric in this equation, and you can see exactly how we did that. It's very simple. So that's one thing you can do here. The next one's current ratio. So current ratio is a measure of how well a company can pay its short-term debt obligations, and we want that to be increasing. The next one is share count. So in this case, we're looking for companies that have maintained their current share count or decreased it, therefore increasing shareholder value. And so the only thing I wanted to point out with this is that if you wanted to add less than or equal to, you simply just add an equal sign. And then we've got gross margin is greater than gross margin from a year ago. And finally, another thing similar to that, the long-term debt to total assets, we also created a new metric called sales over total assets. So we don't have this ratio in Stock Rover, but you can create it using the equation form. Let's click update and we'll see what passes. Okay, great. So there's 81 stocks that pass the Petrosky High F-score. So there's 81 stocks that currently have a score of 9. And one thing you might do with that is you can look for stocks that have, say, a score of 8 simply by eliminating one of the criteria in the screener, perhaps the criteria that is least important to you. All right, so moving right along, I'm going to go to another somewhat similar screener, in some ways, I should say, the Buffetology inspired screener. So if you look at the tooltip here, it's pretty ugly. And I want to walk you through what we did in this one because it sort of takes some of those equations and goes further with things that you can do. But first, I just want to read to you where we got the screener criteria. It's based on this Buffetology book, which is of course based on Warren Buffett's sort of screening or investing philosophies. We're looking for companies that have a 10-year track record of generally increasing EPS with no negative earnings years, long-term debt not more than 5 times annual earnings, which we use net income for that. Average ROE over the past 10 years has to be at least 15%. The average ROIC over the last 10 years has to be at least 12%. And the earnings yield can't be higher than the long-term treasury yield. So I'm going to show you how we did that. We basically took that description and created a screener based on it, which you can do for anything you see like that. So let's just run through the ones down here. The first one is the earnings yield. So we want that to be greater than the long-term treasury earnings yield, which is a little bit under 3. So we just said that earnings yield needs to be greater than 3. The next one is where we have EPS. There was that generally increasing EPS trend. So you could certainly capture that in different ways. The way we've chosen to do it here is we have EPS now is greater than EPS 2 years ago, and EPS 2 years ago is greater than EPS 5 years ago, and EPS 5 years ago is greater than EPS 9 years ago. So what I want to point out about this is just notice that it's not in a continuous chain of EPS now is greater than EPS 2 years ago, is greater than EPS 5 years ago, et cetera. You have to add these and in. Essentially, you have to create separate equations for each of those relationships. And you can do that either by putting and or. So if you add or, it's going to be a slightly less restrictive criteria. Or you can simply enter this as separate criteria. So you can have EPS now is greater than EPS 2 years ago as one line, and EPS 2 years ago greater than 5 years ago as a second line if you want to. These are clustered together in one equation just as a way to basically keep it organized and say, well, these are all trying to get at the same thing. So that's why they're all together here. The next one is that average ROE has to be greater than 15% over the last 10 years. So I've simply added up the ROE over the last 10 years and then divided it by 10 and made sure that that's greater than or equal to 15. So it's pretty simple. You do have to kind of go through the work of creating the average here in the equation. But once you do it, it's done and you don't have to do it again. So the next one is long-term debt. It has to be less than or equal to 5 times net income. So that's really simple. What you can see here is we've got the 5 times net income. It's in parentheses, even though it doesn't need to be, but I just like to do that to keep things neat and clear for myself. This is, I think, the only time we're going to see this today, but there's a lot of other things you can do with multiplication. So for example, you could specify a certain growth level. If you want to see sales that have increased by at least 7% over the last year, you could do sales has to be greater than 1.07 times sales from a year ago, et cetera. So the multiplication can be really powerful in terms of setting specific levels or growth levels that you want to see. The next one is that ROIC. It's the average, just like we saw with ROE. And then finally, we have a bunch of equations that just make sure that there's been no negative earnings years. So again, you kind of have to go through, there's one for each year saying EPS from a year ago has to be greater than or equal to 0. And those happen to all be listed out, but I could have, of course, kept them all in one equation by connecting them all with and, but I just didn't do that here. So just to show you that. Okay, so we've just run it. We've got 109 passing stocks, and that's perhaps a bit, quite a bit to start with. So let's see if we can use a quant to help us narrow that down, or at least help us figure out where to start our search. So I'm going to make a really simple quant out of this Buffetology inspired screener. First, I'm going to right-click it and copy it, and I'm going to call the second one Buffetology inspired quant. And I'm going to open that one up again. Select Use Advanced Quant Features, And okay, we just have four criteria I want to weight. And in this case, let's say I'm particularly interested in value stocks. So I'm going to place a high amount of weight on value metrics. I'm going to place 40% weight on earnings yield. I'm going to add in a new metric that's actually not included already in this screener, which is the price to free cash flow. So let me just write that here. Price to free cash flow. And I'm going to put 20% weight on that. I'm going to look for PEG forward and put 20% on that. And that PEG forward gets at both growth and valuation by comparing the price to the expected growth. So, the price to earnings to the expected growth. So a lower number is great. It means it's cheap. And finally, we'll just select one growth metric. I'm just going to do operating income, the 5-year operating income average, and I'm going to put 20% on that. But you could use any growth metric or any metrics you'd like. So we've got our 100%, and I'll select update. And now that's going to give us, of course, we're only looking at the top 50 at this point, but you could increase that limit to see all 109. Gilead Sciences comes in here at number 1. Taro Pharmaceutical, which is one stock I recently wrote about, that comes in at number 2. Apple comes in at number 3. So basically, you could then have a little bit more guidance in terms of how to attack this list of 109 stocks that pass the Buffettology screener. Okay, so very quickly, I'm looking at the time, so we have about probably 10 more minutes of presentation left, or perhaps a bit less. Very quickly, I want to go over a couple screeners. I just want to kind of point out some criteria that you might want to use. The first is the short candidates screener. Let me just close this so it's not. All right, there we go. The short candidates deteriorating fundamentals screener. So if any of you are interested in shorting, you can actually screen for shorting candidates. The only thing is you're basically looking for stocks that you wouldn't want to buy. In some ways, that's what you're doing, kind of taking the opposite of screening criteria. But there are just a few things you want to add in specifically if you're looking for short candidates, and I wanted to talk about those. So notice that the top criteria here is the average volume has to be greater than 200,000. And that's just to ensure that the stock is liquid, and therefore you would be able to sell it when you needed to. And then the sort of middle section of criteria is just getting at those deteriorating fundamentals. So cash flow is decreasing, debt is increasing, operating margin is decreasing. So basically things you don't necessarily want in a company that you own as a shareholder. And then price has to be greater than 20. And so that's important for shorting because you want the price to be able to fall before it hits 0. So if it's too close to 0, you won't have much potential of making much money off of that. And then finally, there's the short interest or short percent of float, and you want that to be less than 15. And the reason for that is just that you don't want to be late to the shorting party. So that is a few things I wanted to point out on a short screener. And then the other one I wanted to show you is top grades. Top grades is a super simple but pretty cool screener. It's actually a basic screener. It just contains 3 criteria. It's Morningstar grades. So these are the same grades that you see over here. And it looks like Gilead will definitely pass this screener. These are grades that Morningstar gives you, and actually if you mouse over, it'll tell you kind of where they get that growth grade from. So they're kind of factoring this in, and they're pretty strict with their grading criteria. So if you create this top grade screener, there's only 11 stocks that pass with top grades in all of those categories. But those grades can be incorporated into any screener that you use. So it's kind of a nice thing I just wanted to point out. And I believe those are in the advanced metrics folder. We also have grades as a view tab as well. So you can view them here and sort on grades for, again, any screener that you run. Okay, so I just wanted to quickly go over those. And then I have one last screener I want to spend some time with, and then we'll get to questions. So the 17-factor growth stock ranker, which was developed by Howard Reisman. It's a little bit of a mouthful, but it's a really great screener. So as you can see, it's a pretty elaborate quant screener. So we're just going to come back into the quant stuff here. It has only one criteria, which the stocks have to be greater than $2 billion. So looking for mid cap and above. And then you can see it gets pretty specific with the quant weights. So you see 2%, 4%, 3%, but those are actually kind of lumped into these larger categories. So you have 35% of your weight is in growth metrics, 30% is in valuation metrics. Those are the bottom two there. 20% are in efficiency metrics. So that includes operating margin versus industry, ROIC, ROA versus industry. And then finally, 15% on price performance and momentum. And so that's those top items there. So the return versus industry and the return versus the S&P 500 over different periods. So let's run the screener. We're going to get the top 50 stocks. Gilead comes in at number 1 once again. So Gilead's obviously doing really well. What I might want to do now is just show you how to save it as a watch list. So this is perhaps a population I want to spend some time with. They're looking really strong, but I don't have time to investigate all of them right now. So what I might want to do is save them as a watch list. And to do that, I go to the Actions menu, Save As, Save Table as Watch List. And I'll give it a name. And we recommend if you're running a screener, specifically just give it the name of the screener and when you ran it. So 17-factor growth ranker, and that's 8, 18, 15. And then those 50 stocks will get saved together in a watch list. As you can see, they've been added here. So of course, they're missing the rank that they originally had in the when we ran the quant, because you only see that rank column when you run a quant. So if you wanted to come back to that and see that ranking again, you can easily do so by, where is it? Right-clicking your quant. Just right-click it. You don't actually have to select it. And there's the option to apply quant to watch list or apply quant to portfolio. So let's do apply quant to watch list, and I'm going to apply it to this watch list. And not surprisingly, it's going to have the rank within table is going to be the exact same as the rank in the context of the original screener, just because that's where we got these stocks and we just ran it. Of course, over time, it might start to spread out a bit and be a little bit different. But that way you can always get the ranking, you can always rank the population of stocks within any given watch list or portfolio. So just to show you another example of that, we'll again take that 17-factor growth stock ranker. And I recommend using this one specifically because I really do think it's a great screener. And we'll apply that to our sample Warren Buffett portfolio. So when we do that, now we can see that Chicago Bridge and Iron is number 1, and it was number 24 in the context of the original screener. Everything else here passes that $2 billion market cap criteria, which we know because they're green rather than red, but they didn't make it into the top 50. So just to hammer that point home, if you come back to the 17-factor growth stock ranker and we look at number 24, we'll see Chicago Bridge and Iron. So that's where that number comes from. Okay, so basically it's a pretty valuable tool to use that applying quant facility. I use it all the time. And one other application of it is if you take something, here's where I've really just limited it down to kind of one single goal, so growth. I've concentrated growth metrics into this quant called the growth ranker. And as you can see, I've placed a little bit more emphasis on more recent growth. So essentially looking for sort of accelerating growth metrics, but only a light kind of weighting in that direction. You could get more intensive with that if you wanted to. And then I can apply this again to any portfolio and watch list that I have. So I can just run it if I want to, and this will run it on all the stocks because there's no criteria, there's no filter criteria, it's just weights. Or I can right-click it and apply it to, let's again apply it to that recent watch list that we just created. And you can see it's going to be pretty similar to the list that we just had because that already incorporated growth metrics, but it does change things around when you focus specifically on growth. So you can do that for anything. You can do that for valuation, capital efficiency metrics, performance versus industry metrics. You can kind of concentrate them all in a quant and then use that quant as a way to essentially sort the stocks in a particular population. So it's a lot of fun to do that and kind of mess around with different criteria. So that's what I had for you today. It's 1:45, so I'm glad we're not over. I wanted to just show you a couple of resources before we move on to questions. So first of all, if you start using the screener and you end up having questions about how it works, I recommend using our help resources. You can get to this. I just clicked help in Stock Rover. It's the same as going here, help and support, and the resources menu. And we have this pretty thorough list of how-to help. And you can go to screening and select your category here. And we have really pretty descriptive help with screenshots, so it's hopefully will actually be helpful to you if you needed it. And we also have a bunch of videos. Oops, just scroll down on screening. So you can see sort of simple introduction to screening as well as whole webinars on screening. And this one, of course, will be added to that. And then finally, I wanted to encourage you as you start screening yourself, or if you've already developed some screeners that you like, to submit them to our library. So go back to the library, and at the bottom here, there's the option to suggest one of your own creations for inclusion in Stock Rover library. And if you open that up, it's going to list out all the screeners that you have currently in your account, and you can submit them to us, and you can tell us how you want it attributed, if you want it attributed to your username or your name or anonymously. Yeah, so as long as it's not redundant for another screener in our library, we'll put it up so that other people in the Stock Rover community can import it into their account. Okay, so with that, let's invite Howard Reisman into the conversation. He's the CEO and co-founder of Stock Rover, and he'll be answering your questions.
All right, thank you, Alex. That was a really nice job. So let's go to the questions. If you have questions now, it will be a great time to type them into your question box, and we'll go through them beginning to end. So,
okay.
Alex, will you read them and I'll respond?
Sure. So first, it's not really a question, but we have a nice note from one of our regulars. We missed you. Is your snow finally gone? So luckily, it's funny you say that because it's like a 90-degree day, and I would love snow right now. But our snow is finally gone. The type on the screen is too small to read. Can you enlarge it?
Yeah, if you, in general, I mean, it's obviously too late now for that one, but in general, if it's too small, you can just use your browser controls, to usually Control plus or Command plus to increase the size of the browser font, and that generally works pretty well.
Yeah, so here I'm zooming in.
Yeah. Right.
Okay. So 10 stocks were out of favor.
Yeah, I think that's referring to the first out of favor screen you were in. I think actually 18 passed that screener.
Mm-hmm. And this was a pretty restrictive screener, so you could certainly adjust some of that criteria and let in more stocks that are out of favor if you're looking for cheap stocks that could potentially be actually good picks in the long run. Right. Is there a Stock Rover book?
No, there's not a Stock Rover book, but there is, as Alex mentioned, there's a tremendous amount of documentation on the website, both in the form of HTML and the help facilities, as well as some PDF documents on how to use Stock Rover. So I would say if you poke around the help, you'll see an awful lot of material, and then there's a lot of investment material on the blogs themselves, basically. So there's a lot of information on the website, but it's not in the form of a book.
Mm-hmm. And you can use you might try using search. So if there's something particularly that you're interested in, just search for the word and see what comes up on our website. You might have something about it. Does it categorize stocks based on highest, lowest, or buy-ins to price to stock? Sorry, I don't know if I read that correctly, but
yeah, I'm not really sure I fully understand the question. I mean, all the screeners that Alex demonstrated simply, at the end of the day, will come up with a list of stocks. Now, within that, you can do categorization. You can group them, by sector or if you by other criteria if you tag them. But there's nothing automatically that happens as part of the screener. If that didn't answer the question, please follow up with an email, and we'll try to do a better job of answering it.
Okay. Do you have a screener based on Graham's book, The Intelligent Investor?
Oh, that's a really good question. The short answer is we don't, but we recently added a statistic that can be helpful with that. Just to a little background is Graham's Intelligent Investor. They focus a lot on the expected future growth rate of the company 7 to 10 years out, which is notoriously, obviously, a very difficult thing to predict. And that's really where you can get a lot of variation in valuation on, in a company. And when you're trying to determine margin of safety when you invest, which is a big part of Graham, that the assumptions you use for growth are pretty critical. We haven't created one, but we could actually create one that would be a reasonable facsimile because we have a new column we just added. And Alex, if you go to add columns and just type in growth, one of the things you should see there is the 5-year EPS growth estimate, which is right there. And that's not 7 to 10 years, which is what Graham asks for, but it's a lot of kind of estimated future growth. Now, obviously, it's analysts' best guess of how much the company is going to grow, and the reality can be quite a bit different. But that metric would be a starting point for developing a kind of a Graham-based screener. And it's something I'm going to give some thought to see if we can come up with a reasonable kind of facsimile of that type of screener.
Mm-hmm. Is there a quick way of amending the imported screener to delete Canadian stocks?
Yeah, there is a very quick way to do that. You can add in the exchange they're traded on, and by Canadian stocks, I assume you mean stocks that are traded on the Toronto Exchange. So if you add in a criteria for exchange, and then you can edit that, and you can select everything except the Canadian exchanges. You probably would not want the over-the-counter stuff either. So you can just pick the exchanges you want the stocks to come from. And if you're working with the NSE and NASDAQ, you're going to not get the Canadian, the stocks with a .to kind of symbol, Canadian stocks.
Mm-hmm. So we have a clarification on that previous question. Can we group stocks based on the price of buy-ins?
Yeah, I assume you mean by that the price you bought in at. The short answer is no. You can't do that.
Okay. Can small sets of screener results be shown graphically in a comparative manner, maybe over a 5-year period?
That's a good question. I mean, what you'd want to do is to create a screener that gives you exactly the set of stocks you want. You might create multiple screeners, and then you can compare those screeners against each other. For example, Alex, if you just pick 2 screeners arbitrarily, you could graph them over the last 5 years.
Sure. So let's see. I'll right-click GARP chart, and I'll add in revert to mean.
Yeah.
Oh, that's just going to shoot. Let's do this here. Okay, so there you have the 2, and I can expand that.
Yeah, and you can make that over a 5-year period. Now, to be clear about what's going on, this is not back testing. These are the stocks that have passed the screener today, and then it's just looking back at that population of stocks and seeing how they've performed in the past. So it does give you a hint on how volatile and what kind of performance that screener's had, but it's not selecting the stocks that passed 5 years ago going forward, which is a back testing capability. So not back tested, but it does give you some idea of the personality of the screener as a whole, basically.
Mm-hmm. Okay, and that was our last question. So if you have further questions, feel free to just email us at support@stockrover.com or feedback@stockrover.com. Actually, the best way to get in touch with us is to use the help menu up here and contact us and use this form, which we actually do read these questions that come in that way. So please use it. And thank you so much for joining. I hope you found this helpful. And I'll be sending out the link to the recording very soon. So you'll be hearing from me soon, and have a great rest of the day.